Hello and welcome to the North Country Outdoor Channel, where we talk about owning a small business and anything that goes along with small business, mistakes, success, failure, ups, downs, ins, outs. There's just so much that goes along with owning a small business, and we talk about all that here on this channel. And today is kind of a gloomy day here in northern Michigan, but there is so much that I have to get done. My list is so long, my anxiety is so high. Springtime is a really busy time for me. We're just coming out of winter, and today we were out fixing mistakes that we made over the winter while plowing snow, such as there was a couple of handicap signs that got knocked over, there's some turf damage, some of the grass was tore up, not too bad, but it's just little things like that that need to be patched up. A lot of guys, they don't go back and fix that stuff. That's up to them. Me personally, I do whatever I can to make the customer happy. I like to go above and beyond and try to create a relationship with my customers that then in return gives me loyalty and gives me a better chance of getting that account back the following year. So I tend to go above and beyond. This work is done pro bono. I don't charge for it. So it's a couple days. I pay one of my guys to help me, and we go out, we get some black dirt, we get some grass seed, some straw, and we fix any damage that we may have created over the winter. You know, we made the mistake of causing the damage, so we're going to fix it at no cost to the customer. But today I wanted to talk about tax deductions, and one in particular of vehicles, and the debate that I've had with many people, and it's really was hard to come to a conclusion of, do I drive a brand new vehicle as a business owner, or do I drive a used vehicle as a business owner? And I actually was able to come to a conclusion, and I will talk about that now. What I concluded was there's two different ways that you can use your vehicle as a deduction. You can either keep your fuel receipts and deduct your fuel, or you can take the mileage deduction, which I recommend doing. It's way better. You don't have to keep track of your receipts. And last year in 2016, the government paid 53 cents a mile. For this video, the sake of this video and not overthinking things, I'm just going to say 50 cents a mile just for easy math. Now, what that 53 cents a mile covers is your fuel and your wear and tear on your vehicle, maintenance and repairs. Now, I do believe that drivetrain, anything major goes wrong with your vehicle, a motor, a transmission, something like that, you are able to write that major repair off as a expense to the business. Now, last year on my main truck, I had 20,000 miles that I put on that truck. Now, 50 cents a mile, like we're doing in this video here, 50 cents is a mileage deduction of $10,000. Now, did that truck, between the fuel that I put in it and the repairs that I did to it, cost me $10,000 to drive last year? No, it did not. So technically, I drove that truck for no money out of my pocket last year, which I take that back. When you're talking in tax lingo, it's money that you will never physically have your hands on. A tax deduction is money that you'll never see, but it's also money that you don't have to pay into the government. So initially, up front, out of my pocket all year long, yes, I had to pay for the repairs, I had to pay for the fuel, but in return it becomes a deduction and I don't have to pay that money to the government. So that's what it's, some people have a hard time understanding that aspect of it. When I say I drove a vehicle all year and it didn't cost me any money, yes, initially I had to pay for it, but I get it back in deductions, if you know what I mean. So it's just, it's tough to understand, I know. But so $10,000 deduction, no, that truck did not cost me $10,000 to drive last year. So therefore, I drove a used vehicle for no cost to me all year long. So let's talk about a new vehicle. You go get a new vehicle and it has a payment attached to it, and that payment, let's just say $500 a month. You have that same 20,000 mile tax deduction that you put on it, so it's $10,000, and that vehicle's $500 a month, so that's going to cost over 12 months. It's going to cost $6,000. But you also have to remember that the repairs and the maintenance on that vehicle is going to be all covered under warranty, short of oil changes. So you don't have to figure in the repairs and the maintenance costs of it. So if it costs you $6,000 for the payments all year long, that leaves you with $4,000 for the cost of fuel. I do think it'll probably cost a little bit more than $4,000 in fuel, depending on the mileage and all that. We could break it down and figure it out. But let's just say that it'll cost you a little bit more than $4,000, because that's just what I think. But you were able to drive that vehicle all year long, and that payment is covered as a deduction, costing you no money at the end of the year, and you still have $4,000 that goes towards fuel. That's pretty cool. I mean, the mileage deduction is huge. It's a great deduction. 53 cents a mile is huge. And so my conclusion is you can drive a new truck or you can drive a used truck. Either way, if you do it right, it's not going to cost you any money. It's just the way it is. Now, there's different things. Like, I don't have a new truck right now because my debt to income is kind of getting up there, and I have to be careful what I do, and I have other things that I may need to finance. So I'm playing the used truck game for a couple more years, and then I'll get a new truck. It's so much easier though just to own a new vehicle and be able to write it off and not pay for it technically, and all that stuff. It's just so much easier. You don't have to worry about the repairs. If something major happens to it, you don't have to stress about it. It's covered under warranty. It's just, I would rather have a new vehicle if it's not going to cost me any money. That's just the way I see things. Some people they like their used vehicles. They don't want a payment attached to it, and that's fine. But it seems like to me my vehicles go down when I need them the most, and it's so painful and stressful that I'm gonna end up eventually playing the new vehicle game. I will have a new truck for me to drive. The employees, yes, they will have used vehicles, but every 3 or 4 years, as the warranty runs out on my truck, I'll go get a different one, and then I will put that truck that I was driving into the fleet as a employee vehicle. So basically, it took me a long time to understand how deductions work. This is just one deduction. There's many, 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 many deductions. You can almost write off anything you want in small business if you do it the correct way. But this is a big one. I'm just basically giving all you guys permission out there. If you can afford the monthly payment up front, you will get it back in tax deduction, and you can drive a brand new vehicle for free as a business owner. If you just take a second and hit that subscribe button, subscribe to the channel, and support the work that I'm doing here, I would sure appreciate it. And just remember, you are amazing. You are one of a kind. Tomorrow is a new day. Be creative and make it your own. I appreciate you guys watching, and I will see you next time.